Welcome back to the channel. Today's video is very special. It is an interview with Philip J. Anderson, the author and legendary economist of this particular book here, The Secret Life of Real Estate and Banking. I will leave a link to all of this stuff in the video description, and you will hear us talk a lot about different memberships and paid things. And I know that can be a little annoying for some people, but I'm doing my absolute best to give you as much as we can here on the channel for free, and of course respect the work that Phil has been doing in the markets for over 30 years. Now, he's been discussing this in the public forum for over 20 years, and some can even find stuff way back 25, nearly 30 years. He's been talking about this 18.6-year cycle after he discovered it through the works of Gann, and we do discuss these sorts of books here. So some people might be looking for extra material. This sort of stuff is what we are referencing here, W.D. Gann. This stuff is over 100 years old and still rings very true to the market today. And so with that in mind, with all of the information that's out there, it does get a little bit wearing for Phil to discuss the same thing over and over again. So in this video, we go through a little bit more of a general discussion about governments, the policies that continue to pop up every single cycle, almost to clockwork at the same times, which is why he's so confident that this is not the depression in 2022 that every other social media influencer, even respected investors and economists out there online are talking about. Very, very confident. And there's also many, many calls from Phil looking back, say 10 years and discussing these sorts of turns in the market 10 years in advance, 20 years in advance. Now, it almost seems too good to be true, and it's a crystal ball that no one else has. But honestly, all of the signals and the information is entirely out there for free, or if it's not for free, it's basically a book or a textbook that you can purchase. Anyone can purchase. If you have a computer and you're watching this, you have the money to buy books. And so Phil is very much a very big advocate of getting off social media, getting off YouTube, because it is filled with a ton of noise and garbage from even people who we think know what they're talking about, even the billionaires out there, as you'll see in the interview today. And so the other books that he does reference here, before I get into the interview, are things like Fred Harrison. Look at Fred Harrison, W.D. Gann. Phil's book is amazing, and then other things like this go really into the cycle. Neil Howe and William Strauss, The Fourth Turning as well. With all of that in mind, I hope you can understand where we're coming from when we get into today's interview. It can sound a little abrupt. Phil is a little bit grumpy at times, as you may have experienced from other interviews that I have posted on the channel. But it is all meant with a heart of sincerity to help as many people as possible and just show that the answers are out there. You don't have to listen to me. You don't have to listen to Phil, but he's directing you in a direction to understand where some of this information has come from, and it has been out there before the internet. And if we can understand that, then we can piece it together so that we're not fearful every time we hear and see things from the media, economic collapses, wars, all this sort of stuff. It's just about understanding the cycle and where we are in the cycle, and the fact that the cycle has not changed for hundreds of years, regardless of what has been going on in the day-to-day events of the government, the army, and the likes of those sort of organizations. Some of the resources that I'll leave in the video description that you can watch at the end of this video to get a broader understanding of what's going on out there are these two interviews that I did with Phil this year before some of the major events like the war in Ukraine had begun. This is the sort of stuff that we're looking at that point in time. And I also found a video back in the old catalog here, back from 2018, Phil specifically talking about a downturn after 2019, which of course we now know as C19. And this is put out to all of his members. This is something as part of his subscription service. So I've left a link to that in the video description as well. So this is absolutely incredible to see this sort of stuff years in advance and then look back on it and think, damn, this is what he was talking about. And the other last resource that I'll put down there is the video, the recording live event that Phil and I did on the Gold Coast in April of 2022. This will be down there. You guys can purchase it. It's 3 hours of content going over the cycle and understanding land values and also how the business cycle works. And finally, as a reference point, we are currently in this stage of the cycle. So this little up and down zigzaggy part, this is where we're about to head. We're in this last stage of the 18.6 year cycle for the bull market, the last part of the 14 years before we get the 4 years down. And the end of the cycle is the winner's curse stage. That is the scary part, just like the greed at the top of the Bitcoin market, if you're familiar with that back in 2021, that is what will happen with the rest of the economy, most notably probably the land. That is where things will get crazy. The market collapses after that point and everyone goes absolutely berserk blaming governments, and that's where the overreaching of centralized government happens yet again. It has happened time and time and time again, as you can see on this particular chart, and you can also reference that from the website. So as you get into today's interview, I'm sure you can understand now why I had to put a bit of a preface into the beginning of the video. We do speak about stuff that we've talked about in previous videos, but don't go into as much detail on it, especially with the likes of the 18.6 year cycle. We don't need to explain that in every single video, but I will leave a link to those at the end of this video so you can go and reference those for yourself as well to build upon your own knowledge and hopefully make the most out of this next bull market coming up for real estate, for stocks. Anything is about to go up over this next few years before we will hit a major crash. A major economic problem will eventuate sometime after 2026. And yes, probably something to do with war. It'll be a big economic downturn. This is what happens at the end of every 18.6 to 20 year cycle. It's also noted here in the fourth turning as well. It comes together every sort of 80 to 90 years. So throw 4 of those cycles in. All this stuff is leading towards something major, but it is not now. And that's the stuff that is basically throwing a lot of people off the timing of the overall cycle. And now, unfortunately, I think we'll miss a lot of the gains, get caught up at the top of the market, as always happens, and then we get the collapse and everyone is then shouting at the government that it was the government's fault, and this is how these sorts of things unfold. So, without further ado, let's get into the interview. Welcome back, guys. Today's video is an exclusive interview with Phil Anderson, the creator of the 18.6 year cycle. We're going to dive into more questions about that in today's video. I've left all of Phil's links in the video description if you guys want to go through and have a look at property share market economics, which we'll talk about in today's interview. Also, the author of The Secret Life of Real Estate and Banking, link will be in the description as well. That stuff has a plethora of content and information about this cycle. And I just want to say thank you to Phil for joining us late time over in the UK. I think it's 8 or 8:30 p.m. 6 a.m. over here in Australia.
Hi, Jason. I'm grumpy and tired. Never mind.
Pretty tired. That's not how we're starting the intro. Grumpy and tired. That sounds a bit more like Phil. You guys should know. You guys would know from the last interview. So today's interview, we wanted to do an update as we approach somewhere around the lows of the market. That's what we wanted to talk about because people are really fearful about everything going on out there, and everything is basically.
Jason, I told you we get a low in the first week of October, and here we are. Told you that last time.
He did tell us. Phil did say that last time, and here we are at a low. We'll have to see in the next few weeks. But Phil's pretty certain about that low coming in. And it's a lot of people say that you can't time the market, that sort of stuff. It's just a matter of going back and looking at history, and I think that's where the frustration is coming from at the moment, with the amount of news and noise saying everything's about to collapse. And you keep telling me,
Jason, before we go anywhere, viewers, listeners have to realize that the reason they don't or can't understand what's going on is because the very thing that you have to understand, which is the land market, the economic rent, it has been deliberately written out of economics. Okay, so if you wish to follow that up, you just read the book by Fred Harrison and Mason Gaffney called The Corruption of Economics. Okay, people get into all these ridiculous, effing stupid conspiracy theories, like all the stuff that Trump and QAnon and all that espouse, it is utter shit. Okay, it's crap. Those conspiracy theories, they're just not real. They're done. I think I feel sure they're deliberately espoused to keep people idiotic and in the dark. If you genuinely want to, understand something,
go on, Phil.
If you just genuinely want to understand something, understand that not the theories, but the stuff you need to understand about economic rent's been deliberately written out of economics. Okay, it's as simple as that.
And
if you want to understand how to forecast, you have to understand how the economic rent capitalizes into a price, and then it's traded. It's mortgaged by banks, and we all buy and sell it. Okay. That's the real estate cycle.
AKA the land, in case people are wondering. Land, condos, units, apartments are all a tiny piece of land, or if you have your own house. And so just to squash all of the conspiracy theories, BS right now, that's all to the side. I think a lot of the big questions that people are wondering are the stuff that just keeps getting blown up. And even the smartest people, I've interviewed heaps of people on this channel now, and they all are across the same thing. And if I try to bring up property and stock market and economics, they don't have any clue. They don't marry the two together to understand a cycle.
That's correct.
And so
that's correct.
The questions that keep coming up are, well, inflation has to go higher. That's going to crush everyone. You know, the latest topics are about the Eurozone. UK retirement funds are showing signs of insolvency. Like, I'm sure you get really sick of hearing all this over and over
Jason,
again
it's really
talking about it for
really
the last
simple.
30 years. Yeah.
It's really simple. There's two things you have to understand. Well, three if you want it. We've included about the economic rent. You have to get to the bottom of that first. The second thing is that because the economic rent of land is enclosed and traded as a price, we therefore must get a real estate cycle. The only question you have to ask after that is why it's so consistent at 18, 19 years, 18.6 really. So if you're prepared to accept that real estate, because the economic rent is enclosed, we must get a cycle, then you just simply have to start looking at some history. And the last time that you have a look at, since 1955, the last 11 times that the Fed, you have to watch the US because they lead. The last 11 times since 1955 that the United States, the Fed, has lifted or raised interest rates, 10 of those times, house prices continued to go up. Okay, so what you have to work out after that is you look back in history those 11 times and you work out, you overlay that history with your knowledge of the real estate cycle. And then you work out what part of the real estate cycle we are in. So the last time interest rates went up a bit like this was 2002, right? And the time before that was 1994. So you just work out where you are. If you're at the beginning of the real estate cycle, you don't have to worry about it so much. We're now in the second half of the cycle. It's quite normal that interest rates get lifted at some point because they were lowered during the prior recession. So you just got to understand that when the Fed is in accommodative mode, asset prices go up. When the Fed is in restrictive mode, asset prices have a pause. And the only time you really have to worry about the Fed and what they're doing is at the extreme end of the real estate cycle, which is after 14 years of property prices rising. When you get to the extreme like that, after 14 years up, which we will be after 2026, then you can panic. But at the moment, it's just completely normal. So that's your real estate cycle stuff that you need to understand. You then have a little bit of history, and then you can overlay the stuff that W.D. Gann, G-A-N-N, discovered about stock markets. And the easiest thing to follow on Gann is that Gann rediscovered what's called a decade cycle. So if you start the decade cycle from years 1 and go through to 0, so this time we're looking at 2021, 22, right up to 2029, then 2030. This is this decade. Every single year ended in 2 has been a down year. Every single one. 2012, 2002, 1992, 1982, 1972, 1962, 1952, 1942, 1932, 1922. They were all tough years. It's just the decade cycle. It's the way that it works. And every single year ended in 2 has been a down year. Some are worse than others. But at the beginning of 2022, at Property Share Market Economics, I always put out, myself and Akil, we put out what we call our roadmap, which tells people what we think is going to happen for the following 12 months. And in 2022, we were coming up for the 7-year cycle, and we're coming up for the 36-year cycle. It's just so bloody simple. So you go back and have a look at 7 years back. You go back and have a look at 2015. You go back to 2008, 2001, 1994, 1987. Every 7th year in the stock market, it's called the Schmitter because it's in the Torah. Every 7th year is a tough year. It's just like that. And so the next year that will get really tough will be 2029. But you have to fit that within your cycles knowledge of 18.6 and the decade cycle, and understand that the actual shape and pattern's a little bit different, but the years end up being the same. I just don't understand why people don't get this and why it just isn't. Well, no, I do get it, because the Fed, the government, they're deliberately trying to keep you dumb, right? So all you people listening, it's quite deliberate that they make you dumb, right? So if you really want to try and understand stuff, you have to do your own research, okay? Don't start doing research in normal economic textbooks, because you're just not going to get it. You have to start doing a little bit of history and digging up on your own, right?
Well, I guess that's what people are trying to do when they come to the internet now, so you can find other things. So it's nice to have another resource to be able to go and think elsewhere.
No.
No.
The internet,
okay.
The internet's a crap tool. It really, seriously, it's a crap tool. If anything wasn't understood pre-internet, then it's not going to go post-internet. So the stuff that we've been doing,
more from a media point of view, people can go and find. Well, they're listening to us now, so hopefully that's not a whole lot of
Jason, honest.
Yes,
Jason. We are more, the community in society now is more dumb than it's ever been. And yet here we are, supposedly have the resources of the internet, right? All the internet is doing is it's like an echo chamber. It's augmenting what people choose to believe. It's making us absolutely sick. It's making society dumber. It's not making us smarter. Okay, so in my humble opinion, I think you want to get off the internet, and I think you want to go back into a library, and I think you want to search out some genuine historical information that was put down and actually written in books by people who lived through it. And the first place you start, if you just generally get some serious information, the first place you'd start is probably Fred Harrison, or you'd go back and have a look at Roy Wenslick, or you'd go back and have a look at a little bit of the original Gann, right, who simply showed you how you look at history and how you interpret it. But if you're gonna go on the internet, then start treating the internet as looking for what you're looking for. I mean, we know that if you type in certain stuff based on your browsing history, Google especially is going to bring up for you stuff it thinks you want to know, right? And we know if two people on two different computers put in the same information for the same search stuff, they're going to get different results, right? We know all that. So the internet's just not going to make you smarter. Yes, it can be a tool if you sort of know sometimes how to use it, but if it wasn't known before the internet, it's not going to be known after the internet, because what goes up on the internet is what everybody thinks they know, right? So
I just see it as the echo chamber, and I understand what you're saying. Definitely, there is a whole lot of crap out there. I'm trying to just put one extra piece that isn't crap, so people can actually go and find these resources. Because if you haven't mentioned Fred Harrison, Gann, those sort of things, I wouldn't have found Fred Harrison. I found Gann, over a decade ago, and that wasn't from the internet. It was from an old family friend. He was probably 60 at the time, so he knew about Gann.
Yes.
And then we learned from that point. So, we're trying to do that and help other people find these other resources, rather than go back to the internet, to all of the same big talking heads saying the same crap about the economy, everyone getting dumber. They just think about the interest rates going up, US house prices falling, UK retirement funds, like the same news headlines, and everyone's trying to piece this into their own cycle, and everyone says the same thing. And then they miss what's going on. And I guess that's what
you got to do. What we got to come to is what people, if you're listening and following right now, the economy has a structure. It's based on the enclosure of the rent of land. That structure the powers that be, the people that run the government, sit in the House of Lords, the US military, they do not want you to be smart. They do not want you to understand this. Okay, and if you go back and have a look at The Corruption of Economics, the excellent book written by Fred Harrison and Mason Gaffney, they tell you how the information about the land and the rent was deliberately written out of the economic textbooks. And this is why nobody knows about it. That's why we continue to be so dumb. And it's just why we're just not going to hear it. It's why economists can't understand that when interest rates get lifted, it's exceedingly unlikely that house prices are going to crash, because it's all based on the rent, right? Based on earnings. It comes back to earnings.
Mm-hmm. We went through that in a lot of detail in our live event that we did here on the Gold Coast. You did that whole thing. I'll put a link for that as well. It was a good event. So that you don't have to. It was amazing. So you don't have to go through the 3 hours of explaining it all again. Link will be in the description to do that. But for
put the
today,
link up. People should. It's cheap information. People should go and watch that.
Totally. A $70 book, $100 this, that. It's the best thing I've ever spent my cash on, and it's made me a lot of money and saved me a lot of headache and time, which is what
me too.
You're trying to say when it comes to just understanding one simple thing. Economic rent is enclosed. That is 100% going to continue the cycle, regardless of any other news headline that comes up. And I went ahead and just made a list of things that have happened since we talked. China Evergrande bankrupt, that collapse that was talking about in September, that was supposed to end the world. Russia invading Ukraine in February. The list goes on. COVID-19 global pandemic was supposed to end the world. The latest ones are coming up. Credit Suisse. Is that going to affect anything? I imagine your answer is no.
Well, go back and have a look what happened in 2002, 20 years ago, which is the last time we were in this second half of the cycle. The American military were again attempting to foster discontent. We all thought that World War III was coming because we didn't know what the American military were going to do in Iraq and possibly Iran and also Afghanistan. I mean, they're talking about the same thing. It's just different generals, different president, but it's the same pressure that was going on. We all thought World War III was coming. We were again in 2002. We were talking about the collapse of Enron. There was another World.com, was it? I forget now what it was. But the Nasdaq had collapsed by 77 something percent. It was down way off its lows in 2002. The bottom came out in October of 2002, right? Nobody thought that stock market, the Nasdaq, nobody thought they'd ever recover. We'd had companies like Pets.com and other things that people had put all their money into and then lost the whole lot because it wasn't sustainable. We're all talking back then about exactly the same friggin' thing. You go back and have a look at 1982. 1982, interest rates were at 16%, right? Get that, 16%. Mortgages, I bought my first house just before then. I was paying 17%. All right, inflation was at 12%, 13%, something like that. House prices went up; they didn't go down. So, we're talking about exactly the same thing. You go back to 1962, which was then getting into the second half of the real estate cycle. Back then, we just had a very big credit crisis, and in 1962, in October, people thought the world was going to end because Khrushchev had put nukes in Cuba. And so US again didn't know what was going on. So everybody was worried, they practicing gas masks and sitting under the tables in the schools and stuff and everything else, right? We thought the world was going to end. 1942, the Germans were blitzkrieging and starting bombing in London. It was very, it looked at that particular point, early 1942, the Japanese had bombed Pearl Harbor. They caught the Americans by surprise. It looked like the Axis powers were really on the march. People thought that the West was going to collapse, right? So it got really difficult. Years ended in two. It's absolutely exactly the same now. I see the same processes, and again, nothing changes, right? Nothing changes. The the pharmaceutical companies stronger now than ever. They're trying to keep us. They're trying to keep us unhealthy. The banks are trying to keep us deliberately in debt. The world powers, American military, and they're always looking for an imaginary enemy. That's to keep us in fear. And the government exists so that all those three things can be done legally because it's government backed, right? You got to go beyond it. You go beyond it by studying history. When you study history, it gets very depressing because you see absolutely nothing's changed. Not a thing. Nothing. We're still arguing and talking about the same stuff. And the internet, it's made things even worse because it's just augmenting all of our fears and people looking for all these absolutely stupid conspiracy theories. Absolute nonsense, right? It just don't go. It's just a rabbit hole. Don't go down there.
No. Not at all. I just want to go back to 1982. I agree with all of what you're saying. It's what we've come to expect, at least with our members, and I'm sure your members say the same thing. It's the same nonsense over and over again, but we're trying to see through the nonsense, and hopefully a few more people join and understand that it is the same thing repeating. And if they can help themselves out financially.
Once you see that, it can give you enormous peace of mind. You just see the repeats, and then you know how to take advantage of it all. You know what to do at the right time.
1982?
Right? So there's one on the streets at the moment. You buy in.
Yeah, I'm hearing multi-year bear markets from a lot of respected, I guess, traders or investors. Multi-year bear markets from now. And I'm like, I don't understand why they're not seeing it. But 1982, high inflation rates, high interest rates, prices still went up. How does that happen this time? People, the question always comes back to, well, how is that going to happen this time? I can't see how, people are thinking interest rates are going to go to 8% to.
It's not based on price. It's based on affordability. So from here, history never happens exactly. There's always little oddments and little things that are slightly different. It's got to come back to affordability. Houses have never been affordable. They've always been difficult to buy. So to make, as we go forward from here, they'll have to be made that little bit more affordable. So, you can see in England, it's been a classic example, or in the UK, as the Bank of England has put interest rates up, the new Tory government comes up with three new things to try and make the mortgage more affordable. So they alter and adjust all the stamp duty. They tried to eliminate taxes on the top tiers, right, which wasn't very popular. And they tried a couple of other things, one or two which will go through, the abolition of inheritance tax and all and other stuff, which is attempting to make the house purchase more affordable for the middle-aged, the middle of the road, Jane and Tom over here. So, the Bank of England is trying to make things a little bit less affordable and put interest rates up to get us back into normality. And the government is trying to make it more affordable. So you'll see that as we go around. Governments, we'll probably get a mortgage that's 50 years instead of the 30 or something, so that whatever they can do to bring down the average monthly mortgage payment to make it more affordable, which will happen. And it just drives us into the 14 years up. That's all I know.
All right. So interest rates can keep going up, but the main thing is just about making it affordable. So these interest rates could be 10%, for people buying mortgages, as long as the government and the banks figure out a way to make it affordable for people, whether that extends
it comes back to earnings. There's a limit. It can't keep going up forever, but there's a limit. But reserve banks are not, and the Fed, they're not stupid. They won't keep raising interest rates. They'll take it up to some back to normality, and then things will adjust again. And I wouldn't be at all surprised in 2025 if we see interest rate adjustment and they come down a little bit again, and then people start celebrating that, and we all start to think that the economists will start saying, oh yes, they can go much lower now, and they start telling everybody to buy in, right? Which will be right at the end of the cycle. Yeah, okay.
That'll drop it, and then obviously when things start to roll over, they'll start to increase them. That's what happened at the last cycle that I remember. They had to increase the rates because everyone was going crazy in the party.
In 2026, we'll have been 14 years up. Don't don't join whatever anybody else is doing. Study your history.
That's it. And from this point, it's blood in the streets. Buy up now, regardless of whatever else is going on out there.
Well, you don't just buy anything, but just have a look at the yield and the earnings and stuff like that. But there's plenty of, in Australia, for example, there's plenty of decent companies at the moment that share price is going up. Any company that's mining lithium, share price has been going up. The drillers, their prices have been going up. There's one or two very good companies involved in that field. Their prices have been going up. Any stocks that have been involved
is that
in
part of the commodity cycle? Is that part of the commodity cycle also going up?
Stock prices going up, trends up. So it's not everything's been going down. There's always stocks that are on the move. Always stocks making new highs in some particular field or fashion. There's not been so many at the moment, but over time they'll come back. Banks as well. Banks are a little bit overdone in most places because there's a bit of fear around, but as interest rates go up, the bank margins must improve. That will improve their profitability over time, and it will allow them to lend more money or create more credit. So banks are a good thing to look at the moment as well.
As in getting it because they're going to be making more profits into this second half of the cycle.
No, the banks at the moment, their margin must improve when interest rates go up, because they can pay exactly the same deposit rate for their clients but start earning more on higher mortgage rates. So their spread increases. They must make more money. They must, absolutely must. So over time, their prices will go up because their earnings will go up.
Is that going to be? We've talked about it. I know we've talked about it in the past, so people should go and watch the previous interviews that we've done. I guess looking at actual signals for the end of a cycle, just something that might be a little bit more of a leading indicator. People are. It's a good time
they're
to
going to have to subscribe, Jason. They're going to have to subscribe. Go in my service and get educated.
Links are in the description for that. There's if you want a little hint, just what Phil has talked about just previously. Banks have to be making profits now. Therefore, let's see what happens at the end. Interest rates, we talked about that going into the end of the cycle, and at the other side of the cycle, when things start to crash, same old thing. They'll start to drop them too late. Is that what you're expecting?
Well, rule number one: the Fed's always behind the curve. Always. Rule number two: the government always makes things worse. Whatever action they take will always make things worse. Basic rules.
That's it. Let me just share this with everyone again, just in case we skipped over it. So this is from Phil's website here, Property Share Market Economics, the 18-year
we didn't put
cycle.
we didn't invent that yesterday. That's been up there for the last, I don't know how many years, right? We haven't changed anything yet.
You got there the Source Ascend Strategy Money Week Magazine 2014. So that's been up there for a long time.
Yeah.
And you've talked about this, I know, since I found you in 2012. So you used to have just a clock. It's also on the website.
Look in the middle. Look in the middle. Years ended in 1 and 2, right? Look in the middle. 2001, 1981, 1961, 2021, 22, right? Wasn't hard.
Yeah. So this was all put ahead of time. This is about timing the cycle. And, I had a couple of comments recently about you're a fool if you're trying to time the cycle, but I think that's the only thing you can really do. You can't really say what price it's going to be at. It's only really the timing that you could aim to get.
Well, it depends on the time frame. I'm not talking about, you can't time the market every day, but
sure.
Certain years are up, certain years are down. And you ended in 2022 was always going to be down. That's not hard to
do you think there's any other science behind that? Because I know people will be like, how is this even possible? Yes, it's shown over the last 100 years that every year ending in 2 has been down or tough. Maybe they haven't gone down, but they've been sideways and stagnant.
Yes. Yes.
What's the
it's very good science. If people want to know what that is, they just need to subscribe. I don't talk about that in public because that just makes it too easy to criticize what I do. But subscribe. You know what it is, Jason. Right. But I'm not. I do in public. Yeah, but it's very good science. It's on the level. It's and what's more, it's really easy to work out. Okay, it's not hard. It's all there. What happened in the past for the same reasons going to happen in the future.
And so that then leads into the future. The same sort of things we start to see with the the mega structures. I know someone's talked about mentioned that to me as well, with the Saudi Arabia plans to build 100-mile long the line.
Yeah.
Are these the sort of?
I don't think that'll get built, but the plans, but the ideas come out, right? The Japanese now have got something they're going to build. What is it? 421 floors. The scheduled date for completion of that's 2045. That's just that's 14 years from 2031, right? So there's your date for the next cycle. I mean, how hard is it?
That's the next cycle top, guy. So it's a buy the dip in 2029, 2031, and then ride it up to the next peak in the 2040s.
Yeah.
Ray Dalio's theories. I know we're talking sort of bigger picture here. Is there any?
Intelligent stuff. He said cash was trash right at the top of 2019, early 2020. Guys, stop listening to these guys, right? They don't understand what land is. They're not.
You know what I get?
They're just. I don't know why. So Elon Musk's another guy, right? Look, I'm not saying he's not a smart guy. He's made a lot of money with some great inventions, but I don't know why that gives him the ability then to start telling everybody what they should be doing, and why it makes him smarter in forecasting than anybody else. Right, so it just doesn't. Just because he's made so much money, we've talked about that before with billionaires, qualify him to be giving you advice.
But Ray Dalio has that qualification of being an investor, a long term, and with the billions of dollars in his hedge fund. People sort of say, well, how do they all miss
whatever
this?
He says? Do the opposite. Whatever he says, do the opposite.
Why do you think they're still so successful with their own hedge funds? Making money, that is, in terms of success.
It's different to be successful in your own right. Be a bit more like Warren Buffett. Warren Buffett doesn't tell everybody else what to do, right, at certain times. He doesn't think he's smart enough to do that. He just focuses on his own business. So Ray Dalio and others, they focus on their own business, and they've done well, and good luck to them. That's fine. But that doesn't make them qualified to then start making accurate forecasts, because they won't. Warren Buffett doesn't come out and forecast. Warren Buffett just sticks to his methodology, right? When he sees good value, when he sees he can buy earnings cheap, he goes and buys. That's a very good policy. You'll do really well if you can do that. If you know the difference between value and price. A lot of people don't.
So then what do you think?
Follow Buffett.
I always say don't follow Buffett. He's got billions of dollars, but his strategy...
He doesn't forecast, right? He doesn't forecast. He doesn't think he's good enough to forecast, and he tells you he tells you he's not good enough to do it. But Buffett can identify cheap earnings.
Value.
He does very well with
that. For the average punter, though, it's a different strategy, though. He's got the billions of dollars.
Completely, yes. It depends on what your strategy is. So why would you listen to somebody if their strategy is different to yours?
Fair enough. Yeah. Whereas the punter on the street, they can't go and just buy up these companies with billions of dollars when it's cheap. They got to buy it at the stock market value. So they have to understand how to see value on a stock market chart. And that's where, for us, we come back to Gann, learn how to analyze a chart with Gann, and same deal for you.
The problem that the average punter runs into is that they get controlled by their own emotions. So at the moment, they're listening to everybody else. They're listening to everybody else say there's recession coming, and listening to Mr. Diamond say it's Armageddon, and listening to Elon Musk say, "Oh, I don't have a very good feeling about this." So they don't act they don't act at the right time because they're listening to everybody else, and it influences their emotions. Don't do that either. Work out what would you suggest?
Where do you go then? You're saying don't listen to influencers, don't listen to us. We got different strategies. What can we give them as
Secret Life of Real Estate and Banking? Know your history.
Okay, go and read this book.
So you'll know at certain times how to behave. And this year was one of those times where you just have to wait and sit it out. You have to wait for the market to finish its downtrend, which is close now. It's not going to go up tomorrow straight up. It's got to build a base, which it'll do over this month and next month and perhaps the month afterwards. You'll see the base. You'll just be able to work out where the lows are. And then as they start making high tops and high bottoms, it'll be easy to get in. But having said that, at the same time, even whilst the general stock markets have been going lower all year, there's plenty of stocks been going up. Plenty of stocks. There's at least 20 or 30 in Australia that have been going up strongly. 5 or 6 of them are lithium stocks.
Lithium is where you're looking, and is that trend likely to continue based on
over time? Yes,
technology coming out from
not
batteries?
not tomorrow, but over time, yes. I think that trend will continue.
I got a question from a member here. I don't know if you want to answer it because it's to do with some of the other cycle stuff. Do you look at anything to do with the sun and solitary cycles, or shall we leave that for another time?
They got to join if they want to see that type of information, because that's how you get things exact. You got to join. I don't do that in public.
Fair enough. Can understand. Yeah, look, I feel like we've gone through pretty much everything that people have asked for. It's more around looking how to ask those better questions. What you said today is basically turn off internet. If you're finding the stuff that makes sense, go with it. Otherwise, turn the crap off. Stop listening to billionaires and focus on the history.
Don't treat the internet as an echo chamber. Don't go looking for what it is you're looking for, right? I mean, got to be a little careful. I'm so pleased I did all my book and all my research. I'm so pleased that I didn't have the internet. Otherwise, I think I'd have probably not found the right stuff. I think.
You can look at it in two ways.
I sat in the Thomas Jefferson Library in St. Louis, Missouri. I sat there for a week and a half, just looking at stuff. Right, I had to go over and do it myself. It was 1996 or whenever it was. Right. Okay.
Uh-huh.
So that was where Roy Wenslick was and all this stuff. It's probably still there, but nobody goes in now. So anyway, you know what I mean.
I do. Look, I guess we're pretty grateful that we can at least find this sort of information online so that it can be spread to more people so they don't have to go and travel to Missouri and, sit in the libraries. If we can use the internet in that way, then yes, there's a lot of good that we can find from it. But it is now like sifting through a rubbish tip to try and find.
Well, it's not hard to get information from me. You just go to a blog and sign up. It's free, right? And then that puts you into what we do, and you can make up your own mind whether you think it's for you or not. Just sign up. It's free. It's not hard.
Yep, for sure. We'll wrap it up soon. Any last things? What we could see with this part of the cycle, how to feel. I guess where I'm coming from is that there is still more and more heavy information or heavy news coming out. Even US house prices have been falling this year. So people are saying, well, is this stunting the cycle? Is it stopping the cycle? Is the cycle shortened? Because the house prices have fallen.
Oh, no. Well, what have they fallen about? 0.01% or some nonsense, right? They escalated from the pandemic reasons. They have to pause. You can't go up 20, 30% every year. They do have to pause. And there has to be adjustments as interest rates go up or normalize. They're not really going up as such. They're normalizing, and that has to be done too. Some areas will be more difficult than others. But this is where you've got to get a little bit educated. You have to know that when the Fed takes away the punch bowl and is in its tightening type cycle, asset prices pause. Then you've just got to know your real estate cycle. 14 years up, 4 down. We're not at the extreme yet, so it's not going to be big dramas. So just know your history.
So
we've had to. I told everybody at the beginning of 2022 that we'd have to get a pause because after what had happened the year before, the Fed gets all the stuff that's happening. It's quite normal. I think it's on page 300 and something of my book. I demonstrate in the second half of the cycle that the world's bankers will suddenly have some reason to panic about inflation. It's the same every single cycle. It's never been any different whether the Fed's there or not. So it's all in there. The history's in there.
Book was written in 2008 as well. So if anyone was wondering.
No, the book was written years. The book was published in 2008, but it was the actual original chapters were up on my website, posted on my website from about 1998 to about 2002 or thereabouts.
Is that website still live?
Yeah, the website's still there. That's the old businesscycles.biz. All the original stuff is still there when I posted it up. It was only in 2003 or 4 I had a couple of subscribers talk to me and say, Phil, you should actually issue a book now. You've written all those chapters for us as subscribers. Why don't you put it in a book and publish it? So that's when I went looking for a publisher, why I ended up in the UK.
Right. I had some other people ask, because you're sort of sick of talking about the business cycle, the real estate cycle, because it happens time and time again. People get blindsided by it. They go down these paths of, the interest rates, blah, blah, blah. It has to end this time. The cycle's shortening. You've done it for nearly 30 years now, and it continues to repeat.
I'm getting the same questions. I had these questions in 2003 and 4. So the same questions.
I mean, I asked you the same questions when we did interviews. I think it was earlier this year in February, before the war, and I did a video with you saying recession is impossible, and people were thinking, well, there is a recession now, so you're wrong. And you were specifically talking about real estate prices. There is no recession in real estate prices in 2022, and it hasn't occurred so far. We've got 3 months left, or 2.5 months left. So yeah, that's still on par. Sorry, the question was, would you like to talk more about GAN and GAN cycles? Like, a lot of people are starting to get interested now, having found this and your stuff.
Yeah. What I really will be talking more about, I'll be doing more GAN and stock markets and trading and stuff. What I will be doing over time is doing my citizens dividend work. So I'll be showing people how, if we collected the economic rent of land for citizen revenue, which you can do through a citizens dividend, and then pay it back to the citizens, each and every citizen, every year, like they do in Alaska and Norway and Singapore sometimes. We could actually eliminate government. We could get rid of government if we collected the economic rent of land and paid it back to everybody as a citizens dividend. I've done an ebook on that. That's on the website. Yeah, that's what I'm going to talk more about. I'm completely sick of government. Governments, they're getting taken over by dictators in certain places in the world. The American military loves that because it gives them not just an imaginary enemy, but it gives them something to fight against. So we can all make more armaments, and all the armaments manufacturers get richer, right? It's the takeover of government. It's the hacking of government. I'm sick of it. I'm entirely sick of having to be told what to do. The lockdowns were just utterly absurd. They were stupid. I've never seen anything more stupid in my life. You look at what's going on in China with the government and zero COVID. I mean, for heaven's sake, it's a flu. For heaven's sake, right? Mm-hmm. Yes, there were some citizens in the population that were more susceptible to this, and we need to do the right thing and make sure that they're well protected. But to lock up 20-year-olds and 30-year-olds who were never going to die from this flu is absolute bananas, right? That's government for you. There's some of the stupid ideas that come out of government. The idiotic stuff that Trump was putting. I mean, how stupid can we be, right? It's time to get government out of our lives. That's why I talk about citizens dividend.
Crypto, blockchain, is that a possibility to get the government out of our lives, to decentralize it?
Yeah, I hope so. I'm
electronic fashion.
I'm a big fan of digital currencies, electronic crypto, blockchain and stuff. It would be the perfect mechanism to put in place if no speculation could take place and asset prices were stable and land price was zero because we're collecting the economic rent.
Just to be clear, people are very scared of central bank digital currencies. That's not what you're talking about.
No, I'm not. No, central bank digital currencies. You've got a total right to be scared of it. What's coming after the next downturn? After we get the next land price led downturn, governments will probably introduce some sort of centralized currency, and then governments will tell us how they're going to let us spend it. They'll get rid of cash completely, and then we'll be at the complete mercy and the behest of government. And if the wrong people get into government, even democratic governments, this is going to be scary. This is going to be really scary because if the government decide that you've been anti-government, they just won't give you a bigger allowance, and you'll be at the complete whim and the mercy of the people in control. It's going to be dreadful. We're going down the wrong path. I tell you, this is why
So do you think
we have
society
to
is
limit government.
getting worse? I'm always on the belief that things have been going up over the course of history over thousands of years, but I guess we have to have some sort of downturns in the
Oh, no, I
macro
think
upturn.
overall, certainly in the Western world, we can do things now that we can't ever do before. I think it's quite positive and it's fabulous. But it's when the downturn happens, every real estate led downturn, land price led downturn, that's when we start to get more centralized control. And this time it'll be interesting to see how that unfolds, because government and a digital currency really does have the ability to control our behavior now. You can see this in China, what's coming in China, right? The Western governments will take the best and worst of that so that they can reasonably control their citizens. Because I can tell you, when the land price finally turns down, people are going to be really mad. They're going to blame governments when it's really their fault, because they were it's all our fault because we were speculating. When things turn down, it's going to get really seriously difficult after the next downturn. You want to be prepared for it. You want to know what you can do.
Do you think that's the conspiracy theory prepper's way, or is there a more normal way to prepare for this? Do you have a preparation for this?
You can see after 2008 in the US with the movements that were really the movements that started to try and that were blaming the banks and everything else. The government had to do the US government had to do everything possible to stop revolution. They ended up being the Tea Party stuff, right? Which the government then made sure that they couldn't go too far. No bankers were jailed. Nothing else happened.
They've wound back all of those things too. Just as a
we're going to go through the same thing after once the next downturn starts. We're going to go through the same thing. It'll just depend on how serious things get. More than likely there'll be war somewhere, so that we all get distracted again, and that'll kick off the next cycle, because world powers have to create a whole heap of armaments. More than likely. We've got to finish there, Jason. I hate to finish on a negative note, but
no, we will finish. People are like, it's just, I don't want to leave it open for people, because the question then is, well, how do I prepare for that? The answer is,
all right, that's easy. Read my book. If you like the book, subscribe. Just add your name for free to our blog, our email list, right? Just add your name in, and then you'll get an email every now and then, maybe once a week. And if you decide you like it, you get your chance to subscribe to the stuff you want.
Fantastic. Well, look, at least you got the real estate cycle out there. If you want to prepare, you still have time. Now is the blood in the street to create that wealth. And don't be a fool at the end of the cycle. The winner's curse is coming.
Yeah.
Phil, thanks again for your time. All links are in the video description if you guys want to learn more. I'll see you guys at the next video. Thanks again, Phil, for staying up late.
Thanks,
appreciate it.
Yeah, good. All right. Feel better now.
Thanks, guys.